Welcome to video lesson 5. This is the last lesson of um, bringing stocks from this number to this number and that number to this number, and so on. So last week we did bringing it from 5 to 10. This week we're gonna bring it from 1 to 3. We basically gonna nail it down to the very bottom, and I'm gonna go through the whole procedure of how I screen and how I look for stocks and how I find them, and what the whole basic step for me before I say okay, it's time to go ahead and make this purchase. So what we'll do here is we'll go to Finviz again, as we have done from the beginning. We're gonna go down to the screener, and then from the screener we will go below $3, and then below 30 million, and then sector, and then average volume, institutional ownership. So now we've gone to a point where we have roughly 2 pages. Well, what I like to do is because I have the higher end, I have the subscription based. I like to actually, look at the charts instead. And while I'm looking for the charts, we did last week in terms of either a very long 3 to 6 month consolidation period we're going to look for, or we're going to look for a flag pattern, or we're going to look for a cup and handle formation, and when we find it, we're going to go further into the stock. Now this right here is a somewhat of a very long flag pattern. It did come down further and further as it went along, but you will see within the next maybe week to 2 weeks you'll see another move higher. As you can see, this tried over here to get closer to the 200 EMA. It did not work. This time it hit that 200 EMA. It did not move further, and this time it will actually go above it. And the reason why I believe so, again, is we come down here and look at the shares outstanding. So now we've come to this point where we're looking for that. Now what we want to do is we want to see if we can keep our picks to 2 or 3 or even 4. We don't want to look at anything that doesn't make any sense. This one right here, again, it went up and it came back down. It's going sideways. It's still maybe another 2 to 3 weeks away. No point in looking at that. This one is still downtrending. This one, huge drop. It's gonna take a while before it catches up. Same thing here. It's going sideways here. This was actually presented to me on Friday, and I was pretty sure that this was going to be their end result, that it would come back further down. Again, so now that we have our list, now I saw 2 on the other page that I liked, and I see nothing here. Nope. Nope. As you can see here, this one has been consolidating for 1, 2, 3, 4, 5, 6 months, and this is going into the 7th month. So it might be on the move in the next couple of weeks. But at the same time, are we looking to hold on forever? I don't know. We've been holding this one for a little while, and we have not seen any success. So we're gonna see what we can do. But again, a downtrend, a very confusing chart. They don't know what they want to do. I think it'll stay above the 200 for a very, very long time. It'll probably move higher. I think they just wanted cheaper shares. As you can see, they got almost from 4 to 2 would be 50%, around 70% cheaper shares, and I mean that's how the stock market works. And I believe it goes higher, but we'll have to wait and see. Not interested. So really, it was RXII that we saw that was really good. This is somewhat of a flag pattern or a consolidation. Uh, it's just really confusing. Rather not bother. And again, this looks beautiful. So you got 1 month, 2 months, 3 months, 4 months, 5 months, and is going into its sixth month now, as January comes around. So that looks like a really good choice there, and that's what we're looking at. So either it's EIEG, it's gonna be DCTH, and I think that's really it. I mean, I could potentially look into this one because this tells me that at a lower price, around 60 cents or 50 cents. Let's see what it is. At around 81 cents, somebody bought, but they haven't sold everything because it's still holding up its value. So it's still roughly 50% higher than what it was at its low of the year. So there's still some strength. What I see happening is this becoming somewhat of a candle here. I mean, sorry, a cup here, and then I see it going sideways, and then as this is going sideways, this comes further down. Now, a lot of the times people won't explain, a lot of things that you will be learning in this course. There is a reason for why they have, a pump and then a dump, a pump and then a dump. Because what happens is when you pump the price for 2 or 3 days, it doesn't affect the 200-day moving average that much. But when you pump it and then people get stuck in it and then it comes further down and it consolidates, then the 200-day moving average comes down a lot faster because the prices come down again. So the lower the price goes, the sooner the stock moves higher. Um, I don't know. It just makes a lot of sense. All right. So we got DCTH. That looks nice. Yeah, LPTN. Again, it's been way too long. Way too long. This thing has been consolidating forever. And you can see the 200-day moving average is sitting at almost about $1. So it might move, right? But we had this trade. We were looking for about 20% on it. We made more than 20% on it, and we got out, and that's pretty much it. So again, this is just ridiculous. So 1 month, two, three, 4, 5, 6, and now 7, and now he's going into his eighth month of consolidation. I mean, I'm sure there's somebody that started off with just 1,000 shares and has bought in a little by little every day, or every paycheck whenever they got paid, and they just racked it up. It almost seems like it could be true. You can see here, there's a whole bunch of buying here, and then 2 weeks later, another whole bunch of buying. 2 weeks later, another whole bunch of buying. 2 weeks later, another whole bunch of buying. It's kind of slowed down now, maybe because they have the shares they want. But it's funny how it could be true. But it is what it is. We're not gonna focus on this and that. We're just gonna focus on what we have on hand. And for now, what I would do is I would take these 2 or 3 stocks that I have. So I had RXII, LPTN is maybe a possibility. Um, but what was the other one here? Oh, EYEG and DCTH. I liked HART. The only issue for me is that it's gone from 50 cents to as high as 3.50, and it's come back down to $2.07. So it's already sitting about 400% higher than its 52-week low. You're not looking to get into something where you are the one that's being sold to. We want to be the ones that are buying at a lower price and selling it at a higher price. Over here, you would be the one buying it at a higher price and potentially selling it at a lower price. It could move higher, but I don't see this stock going from $2 to $8 in the matter of a month or so. For 400%. But at the same time, I do see, DCTH, if it was to go any higher, I do see it, potentially matching its 52-week high, which would be, so we're looking at December, and then we go back. So its 252-week high would be 191 or 192. I see it hitting that. I don't think it's completely impossible. I see maybe it goes higher than that. But again, you're at 55 cents. If we're gonna come back down to the 52 week low, you're looking at 37 cents. So you could lose roughly 35% of what you're holding. But again, if you have your stop loss, you have nothing to worry about, right? So this is what we're looking at. This is what we screened for. It's a shorter video, and it doesn't have 3 or 4 different components that we normally have when in our lessons. That's mainly because we're gonna start focusing on one thing at a time now. All the easy stuff is out of the way. Now it's the complicated stuff, and basically that's what we're looking at. So once I've seen the stock, and I said, okay, you know what, it looks good. What I like to do is I like to start drawing my charts. I like to start drawing my lines, I should say. The first and the most important thing for me is I look at the RSI and the MACD. Starting with the RSI, what I would like to do is I would like to take the price, or the line from the most recent, the highest point that it's had in the past, in about 8 months, I would say, and I would like to take that, and I just draw it across. This is something that I've shown in the chat room, but there are many other ways to draw the line than the one that we're drawing over here. Basically, what makes this thing, where we should have gotten in, should have been here on this day here, this long candlestick. As you can see, that the resistance was from all the way from June, up to December. So you're looking at about 6 months, and it finally crossed above resistance. And what you do is you don't buy the day it crosses above resistance. You could if you wanted to, but normally what I like to do is I like to see what happens the following day. It came back down, and it got kind of, it stopped at support. So when you cross above resistance, this becomes support. So this line right here is support, right? So these trades that we're trading right now, they are short-term trades where we're looking to hold for maybe 3 to 5 days, maybe 6 days, depending on what the situation is and how far along we are. So again, it did cross above, and how you know that these are the lines to draw? You go from the highest to the next highest to the next highest, and when you see it clearly hitting this many times, you know what you're looking at. So right now it's sitting above resistance. It's sitting above support. Sorry, it's sitting below resistance and above support, because now it has a new resistance. Now we need to draw that resistance. So we take it from, we could take it from this point here, but it's kind of unclear, because there was just one big drop here. The real low point for me would be this one here. If I was to take it from here, and let's just say we take it all the way, which way would I take it here? So let's just do this one here. All right. So what is done now is it's crossed above two resistances. It's crossed above the lower resistance, and it's crossed above the upper resistance. So you have to draw as many of these lines as possible. the more lines you draw, the more strength you see the stock has. This right here, this period, we shouldn't. You don't trade in this period here. If you wanted, you could have traded here, because when you get to that point there, it would be sitting at roughly 45 cents. You could have sold it for another 10 to 12% in the next couple of days, but obviously that's not the type of move we're looking for. We're looking for the long-term resistance to be crossed as well, and it crossed above both on the same day. So this basically tells you what you're sitting at and how things go. Now, out of all the confirmations that we have, this is one of them. This is not the only one that you use, but again, what we're going to do is we're going to keep these videos short, so you can watch them over and over again, and you can draw these patterns over and over again. If we have them sitting at 30 minutes as usual, what happens is you have to watch the whole video to find out where these lines are and how to draw them. Let's just say we're not looking to trade these smaller stocks anymore. We want to get into the bigger ones. What we need to do is we need to take again the highest point, and okay, let's take, there you go, let's take this one here, and we take it and we draw it all the way across. If we bought it on this day here, on the second day, so we could have gotten in anywhere between roughly around the 127 mark, and it went as high as 132. So you're looking at another about maybe 3 to 4% on that one. This is for the bigger stocks. Again, there's a different way to look at things. If you had waited a little bit longer and you said, okay, so that wasn't the one that I wanted, you would drew the line for a little further across, and you wait for this one. And again, if you got in on this day, so this day crossed above and this day stayed straight, and you were like, okay, it's still above, I want to get in there. If I come down here, it would be this day right here, so you're looking at roughly 114, and it went as high as 123 or something. So again, this is one of the signs. This doesn't give me a confirmation. There are other confirmations that I need. These confirmations, they work a lot better on large cap stocks than the small cap stocks. That's why we have a 2-to-1 ratio for our winnings. But again, what we're gonna do is we're gonna draw these lines, and we're gonna practice drawing these lines. We're gonna look for the one where we can find the most points that it hits. So over here, we had 1, 2, 3, 4, like 5, 6 points, 6 times that it hit, and it finally crossed above, right? So for me, this entry, I mean, if I was looking, large investors, they look for a 5% return on an annual basis. So we're not large investors, we're small traders. But just to give you an idea as to how well the system works, is for them, they took it in from 113 and they sold at roughly 123, they probably wouldn't have to trade for the whole year, because they're more than happy. They made their money back. They made their 5%. So it's all about, how you look at things, and how things kind of plan out, depending on what your perception is. So from 113 to 123, you're looking at a 9% return. So let's just say you don't want to trade penny stocks, and you want to trade bigger stocks, and you're not looking for that that insane 20% move or 50% move or that 100% move, because you have enough money that just with 5% you can make a good $100,000 profit. This is the way to go. Again, if we bought it over here and we had a 5% stop loss, we would probably have a stop loss closer to the 109 mark. Because you can see it hasn't hit the 109 mark until all the way down here. So we will show how you get out in the future videos, at what time you get out, and where, when a good point is to get out. But this is basically what you're looking at for an entry point here. You want to wait until it crosses above. Wait one day just to see what the reaction is like, right? And you're good to go. So we would have waited that day, and right on this day here on the close, you could have gotten in around the 114, 115 mark for a greater confirmation. And as you can see, the next day it crosses above the 200, and just the next day alone, you made a good 5 to 6% profit. So it all depends on what stocks you're looking for. There are many components that are still required that will be coming up in the future videos, and as every video goes by, things open up and things become more clear, and that's pretty much it. This is the end of lesson number 5. I didn't want to make it a 3-part video, just a single component that we look for. So now we've gone through the whole process. In the coming videos, we're gonna look for a greater confirmation, and that's pretty much it. So enjoy. See you at the next lesson.